Hello, everybody. How we doing? Let me get a big thumbs up in the chat if you can hear me loud and clear. Welcome, welcome, welcome. I see we got a bunch of people on. Hello, everybody across the country. So we got a special treat for you. This is the first time that we're going to be doing this live on our Saturday morning, Saturday afternoon crash course extravaganza. Get you guys rocking and rolling with a whole bunch of things to get you educated. And remember, hey, I know a lot of you guys are probably not PrepAgent members, and if you're not, we got a whole bunch of stuff on the PrepAgent site. So what I want you to do, you have a couple of jobs to do so that you get more amazing material to help you guys pass the exam. I want you guys to hit that like button, hit subscribe, and also I want you to keep letting us know if you like this content that we're putting out for you, because we'll do more of these for you guys. And just keep in mind, if you aren't a member, go to PrepAgent.com where you can sign up. You can get more webinars. We do them weekly. We throw out a bunch of webinars, and you also get a history of our webinar library. So you're going to get a whole bunch of other ones too. So you guys get a lot of stuff. You're going to get practice exams, flashcards, all that stuff right to you guys. And also, if you like me, okay, so for those of you, some of you probably know me, you've heard my voice before, but if you don't know me, what I'll tell you is this: we also offer private tutoring where you could actually sign up and take some one-on-one time with one of our amazing instructors, either myself or Cynthia, and we would be more than happy to help you out in any state that you are trying to pass the exam in. So once again, go to PrepAgent.com if you haven't signed up for membership already, and get yourself rocking and rolling so you can pass that exam. Now, without further ado, let's get to the nitty-gritty. Let's get to this stuff, okay? So, what I like to do first when we're doing these crash courses is I want to see what you guys want to go over today. Because guess what? This is something that I don't have a preset kind of thing that I want to go over. So this is all for you guys. This is something that if you are live with me, and here's the thing, if you're watching this on recording, you want to make sure that you want to come back in the future and watch these live so that you could chime in, get your stuff going. Oh my God, I see a whole bunch of people saying finance. So guess what? We'll do finance. Promise you. Someone said agency. Okay. Someone said they scheduled their tutoring session. Ooh, exciting. Finance. Oh my God. I see. I got you on finance. I wrote that down already. Finance, agency. That's another one. Great. Fantastic stuff. Oh, title contracts. Okay. All right. I see you guys throwing out a whole bunch at me. I like this. I can keep up with you. Keep going. Keep going. And I'm writing it down in my handy dandy notebook. Okay. Deeds. Okay. All right. I got you. We could do deeds. We could do deeds as well. Appraisals. And here's what I'm doing. I'm basically going through so that we have kind of like a little roadmap for us today. Someone said property transfer, practice and disclosures. Ooh, fair housing. Love fair housing. Yeah, got to get the fair housing in, right? There's a lot of questions on that. So what we're going to do is this. I think we got a whole lot of stuff here that we could work off of. So the first thing that we're going to do is this. I want you guys to participate with me if you're live. And what we're going to do is this. We're going to first go over financing. And I'm going to ask you guys some questions. I'm going to participate with you guys. I'm going to see what you know, what you don't know, and hopefully clear some things up for you guys. So someone asked, how long is this webinar? Until my voice goes out. We're going all day. No, I'm probably going to go for a couple hours. That's basically what I like to do. I like to maybe get you in a good amount of material, because I just wrote down a whole bunch of things from the live chat. So I want to get rocking and rolling into that. And what I'm going to do is, I see a bunch of people saying math. I'm actually going to probably, if you really like this webinar, what I need you to do is, like I said, hit that like button, hit subscribe, and let us know that you're enjoying this, because if you are, I might do a whole entire one just on math, but I like to save that for another day. So let's talk finance. Okay? So I think that with finance, there's a lot of things that we need to go over that might be some big questions on the test, okay? So let's talk about this. You ready? So with finance, what I want to do first and foremost is I want to take out the mystique of the primary market, okay, the primary lending market, and the secondary market, okay? So that is a situation. Some people are saying stew crew in the house. Yeah, that's what we call ourselves over on PrepAgent. If you're a member and you watch any of my webinars, we call ourselves the stew crew. So let's talk about this. Who is the primary mortgage market? Who is the primary market? Who is that? Who is that? Who is that? Okay. Well, like, who would be on that? Who would be on the primary mortgage market? Okay. So there, some people said banks. Yeah, I would say, you would have lenders, you would have banks, okay, savings and loans, okay. So a bunch of different people are going to be on that market, okay. That's where loans originate from. Yeah, I like that. Scott coming in with a solid answer there. Give yourself a gold star, Scott. Basically, where loans come from. Okay, where loans come from. Yeah, basically that's going to be our primary mortgage market. Yeah, absolutely. Okay, sounds like we're having a conversation like we're the birds and the bees. So where loans come from, right? So let's talk about the secondary market. What is the secondary market? Okay, what is the secondary market? So we got the primary market down. What is the secondary market? What is that? So there's three people on the secondary market. There's going to be Fannie Mae, Freddie Mac, okay? Fannie Mae, Freddie Mac, and Ginnie Mae. Okay? Someone said Manny Mac. Change that M to an F. It's or make it Freddie. So it's going to be Fannie Mae, Freddie Mac, and Ginnie Mae. So what we're going to do is this. We're going to take a deeper dive right now in the primary market and talk about how loans are generated. We're going to go into the FHA, VA, and the conventional loans, all right? Then what we're going to do is we're going to talk about the secondary market, why they exist, and what they do, too. Someone said Farmer Mac, too. No, not Farmer Mac. So let's talk about the primary market, okay? Let's take a look at this. So situation is this. Here we have the banks, and I'm going to do some drawing, so bear with me, guys. So here is my drawing of a bank. It has money in the middle, okay? And what you want to know, what you want to do is this. You want to understand that banks, I always refer to banks as sticks in the mud, okay? So this is how we draw our sticks in the mud. They have the meh face. They're like, no, I don't want to lend you money. Banks are reluctant to do that. They don't want to lend you money. They don't want to give you stuff. So what happens is when you come along and you say, hi, I found the perfect house, this little tiny house, and I need money for it. Can you give me money? The bank is always reluctant. If you work in that mindset, it's going to make a lot of things a lot easier. Someone said in the chat, Stu, hello there, people. I always love seeing you guys say hello to me. So let's get back to our stick in the mud, crotchety curmudgeon bank, okay? The bank reluctantly gives the borrower a loan to go buy that house. Now, I have a question to ask you, because we always say this when we're in real estate or we're buying a home or we're selling a home. We always say that the borrower is getting a mortgage. So is the money the mortgage? Tell me in the chat. Let me see what you guys say. Hey, Derek. Tyler said Stu's drawings are second to none. Well, don't you know I was actually an artist, and actually what we're going to start doing on the PrepAgent website is we're going to start selling these as t-shirts so that you could get the crotchety curmudgeon bank t-shirt for yourself so you could take home and wear it to your family dinners, all that kind of stuff. I'll even sign it for you. So, no, the mortgage is not the money. So get that through your head, guys. That's what I'm going to tell you guys. The mortgage is not the money, okay? The mortgage is not the money. Always say that. So remember, banks are reluctant to give out the money. The mortgage is not the money. We're going to get to what the mortgage is. We're going to get to that in a second, okay? So let's talk about this. So the bank just gave out all that money. And remember, they're sticks in the mud. So they're like, hey, Mr. Borrower, we just gave you a whole lot of money. Could you, like, we need some sort of receipt. Like, we need to make sure that we get a receipt for this. So what happens is this: the bank then will receive what is referred to as a promissory note. Oh my God. Andrea or Andrea, I don't know which one, how it's pronounced, but you just said it before I even said it. A note or a promissory note. They're the same thing. Just so you guys know, there is a lot of situations where there's going to be synonyms for things. What I always suggest is that you guys get familiar with and get comfortable with the different verbiage that could be used on the test. That's why I say, again, if you go to PrepAgent, you sign up for the package that has the webinars, there's 3 instructors, myself, Joe, and Cynthia, and we all have a different way of explaining things, so you get a real nice, well-rounded explanation of things. So you'll be introduced to different verbiage. It's really good. So the note or the promissory note. What is that, guys? What is the promissory note? Okay, what is that? Okay, let's see. So what is the promissory note? Yeah, someone said that's evidence of debt. So what happens is this. The bank just gave the money, right? The bank just gave the money, and now the borrower gave to the bank a promissory note, which is an IOU, which is the promise to pay back. It's evidence of debt, okay? Basically, I owe you $200,000. Now, the bank, again, remember, they are a stick in the mud. They're like, so what happens when you don't pay me back? Okay, what happens when you don't pay me back? Because I'm sure you guys have had a situation where you've gone out with a friend or a family member, and you've been like, oh, someone has asked you, said, hey, could you cover the drinks? Could you cover the meal? Okay, and you're like, oh, you're never going to pay me back. They're like, here, I give you an IOU. No, you're never going to pay me back. I know that. So the bank is going to treat you the same way. They're like, okay, so what happens when you don't pay me back in accordance with the note? So what they do is this. The borrower gives the bank what is referred to as a mortgage, okay? As a mortgage. So the mortgage, okay, is a situation where the borrower is saying to the bank, hey, if I don't pay you back in accordance with the note, you could go take my home. Okay, so does that make sense to everyone? Was that a really simple way to explain it? Tell me in the chat if you guys like that explanation, if that was a good one. Okay, so what I will tell you is this also, because we have to, let's see. Someone said, my friends just say they're going to the bathroom and then they leave at the bar or restaurant. Okay, awesome. So I love it. I love you guys coming into the chats. Thank you so much for making my morning. I really appreciate that. Now, I want to ask you guys this, because here, there's some of you may or may not know also a trust deed or a deed of trust, okay? And I'm just going to write it here. So a trust deed or a deed of trust is similar to a mortgage. So who here knows what the difference between a trust deed and a mortgage is? Who knows what that is? Because that's basically here, depending on what state you're in, okay, depending on what state you're in, would dictate what you're going to do to secure the note. Because understand this, that the mortgage or deed of trust secures the note. It gives it some levity, gives it some oomph, okay? So what happens with a mortgage, and this is why some of you guys, so let me ask you this question before I go right to trust deed, okay? Before I go right to trust deed, who is the mortgagor? Yeah, someone said, can you explain mortgagee versus or? So let me ask you guys, who is the mortgagee and who is the mortgagor? Because we've just drawn this situation out. We've explained it. So who is that? So the OR gives, right? OR gives. Always remember that. OR gives, EE receives. EE, you giving me. Give to me. I am receiving. There is a bunch of E's in receive. OR gives, EE receives. So now that we've known a couple things, you ready? Now that we know, now because you're in my class, because you're watching this, now that you know that the money is not the mortgage, okay, and that the mortgage is the pledge of the real property, okay, and the borrower gives that. So the borrower, okay, right over here, they're the ones who are going to be giving the mortgage to the lender. So the borrower is the mortgagor. Do we see that? Give me a thumbs up in the chat if you could see that. And also, guys, give yourself a gold star if you got the OREE situation correct. So now we know who the mortgagor is. That's the one who gives the mortgage. That's the borrower. And the bank is the mortgagee, okay? They're the ones receiving it, okay? So let's talk about a deed of trust. So here's what happens. Now, instead of the borrower giving the bank a mortgage, what they do in a deed of trust, I'm going to go all the way down here. In a deed of trust, there are three parties, okay? Okay, there are three parties. There is the beneficiary, trustor, and trustee. And we've established the OR and the EE thing, right? So we have the beneficiary. And who is the beneficiary? That's the bank, the lender, okay? That is the bank, the lender. Then we have the trustee, okay? Then we have the trustor, okay? So let's talk about this. The trustor, just so you know, is the borrower, okay? So what happens is this. Everything in step 1 and step 2 up above stays the same. Bank gives the borrower money, right? Bank gives the borrower money. Okay. Money goes there. Note goes there. And then they say, okay, so what happens when you don't pay me back in accordance with the note? Well, what the bank says is this. In this situation, instead of getting a mortgage from the borrower, what they're going to do is they're going to say, hey, borrower, I want you to give this guy right over here legal title. So we're going to put LT there, okay? Stands for legal title, not Lawrence Taylor's for those of you who have your head in football season and football mode, okay? So who do you got to win the Super Bowl? So they give legal title to the trustee. So who is a trustee? So trustee is going to be a third party, like a lawyer, an attorney, an accountant. It's going to be someone who's just basically going to hold it. So they're like, hey, hold this right here so that if they don't pay me back, so the beneficiary says, hey, if trustor doesn't pay me back, okay, trustor doesn't pay me back, then what happens is we'll take legal title to pay for the property, to pay for the loan. Does that make sense? Okay, did I just explain trust deeds to you? Deed of trust, okay? So that is the situation there. So I see a bunch of you guys are saying Chiefs, a bunch of you are saying Bucks, okay? So hope that made sense for you. So now that we've gotten that, okay, and we've described in a very simple way, and here's what I'm going to tell you guys. A little study tip for you, okay? What happens is this. The situation with all this and everything that you're going to learn, you want to keep everything very simple. And you'll notice something. In my webinars, in how I teach, I always try to reduce everything to the ridiculous. I do not want to get into a situation where we overcomplicate things, because I think that when you overcomplicate things, then you're bringing way too much to the table as far as helping you get to a point where you could pass the exam, okay? And someone said in there, why are we going to do a trust deed? It all depends on your state. It's a state-specific thing. It's like the things like, you know, the old saying how it goes where it says, when in Rome, kind of like, you know, just because we do it here this way, this is how we do it, okay? So basically what happens is it's either going to be in your state, you are going to be in a situation where you're going to do deed of trust to secure the note, or a mortgage to secure the note, okay? Sharon said, absolutely, thank you, Stu, for keeping it simple. Thank you for sticking along with me. So let's take a look at the next situation. What we're going to be talking about now is the secondary market, okay? We're going to be secondary market, all right? So here's what happens. Remember we had the bank before, and they were a stick in the mud, and they had all the money in there? Now, there's no money. There's holes, okay? There's holes in there. There's a hole in their heart. They have no money. So remember, they were the crotchety curmudgeon. Now they're the sad curmudgeon. They have no money. But then you have Fannie Mae, Freddie Mac sitting here with their Scrooge McDuck piles of money that they're, you know, diving into. And, you know, what happens is they're stuck with a whole bunch of mortgages and notes. So the sad bank has a situation where they only have these mortgages and notes. They have no more money to lend out to people. So what happens is they see all these other buyers off in the distance going, "Can you give us money? Can you give us money?" And they don't have anything. So how do we restock the shelves when our product is money? Okay. How do we restock the shelves when our product is money? So situation is this. The banks take the mortgages and notes and they go to the Scrooge McDuck vaults of money that is Fannie Mae and Freddie Mac. And what they do is they sell them off. And they usually package them together. So they don't sell one loan off, two loans off. They usually package the mortgages and notes. They'll make a little bit of money. Okay. Not a whole heck of a lot, but they'll make a little bit of money. And then what happens is these companies, the secondary market, what they do is they hold and warehouse the loans, okay? Think of your warehouse stores. So you're going to see this. Your warehouse stores like Costco and BJ's, what happens? You don't buy one roll of toilet paper. You buy the ultra big, 79 pack, where I'm like, oh my God, yes, absolutely. I'm like, why would I need one thing of Heinz ketchup when I could buy 43? It's only me and my wife. So what happens is this. They warehouse them, they bulk them up, and they sell to investors, and that's how they get their Scrooge McDuck vault of money, okay, just so you know. And what happens is the bank gets happy again because there's now money going back to the banks. So what happens is a big thing that happens here is the secondary market provides liquidity for the banks. Does that make sense? Okay. So someone said, you want me to scroll up? Let me see. I could see. So thank you for telling me to scroll up if you can't see all my wonderful drawings, okay? Because I just put M and N down there. So now I know that that's basically the line that you could see up to. Awesome. Thank you for that. I like that you keep me honest. Thank you, because I'm focusing on my screen, and that's the situation there. So, yes. So what happens here is they give liquidity to that secondary market. Basically, if the banks had to hold on to the mortgages and notes for 30 years, 25 years, however long the term of those loans are, they wouldn't have money to give back to all those buyers over here, okay? So that is the situation there. So Tyler said, so basically the secondary market pretty much bails out the banks to get a profit later on. Well, no, what happens is this. It's not that they bail them out. It's they buy them because they're built to hold the loans for long extended periods of time, okay? Because they have investors investing money into it. So their business is, we're going to service a loan for 30 years and we're going to make money that way. The business of the banks is to lend money, okay? The business of the banks is to lend money. So don't think of it as the secondary market bails out the primary market. Think of it like this. If we were talking about a guitar store, yes, I'm a musician. I love guitars. You ready? So what happens is this. When you go to a guitar store, you buy a guitar, and then you take it home. When there are no more guitars in the guitar store has money. They go to Fender to buy guitars at a discount, and then what happens is they restock the shelves, and they keep the profit. So what happens is this. Basically, what happens is the secondary market is the one that's going to be restocking the shelves with money by buying those mortgages and notes, okay? Because, again, in this transaction, instead of selling a guitar to the public and having money, what they're doing is they're lending money and having a mortgage or note as the product that they're left over with. So it's a little different when your product is money, okay? Rosemary said, hi, just want to drop by in and say thank you. I passed my first try yesterday. Thank you for using us. Thank you for joining us. Thank you for saying that. She said, thank you, Sue, and thank you for saying that. I love that. Thank you so much. So let's talk about, so now, someone said, so the secondary market has endless money. Well, what happens is people invest in it because there is more profit in holding the loans over the full term. There's more profit in that. So people would rather invest in that than the other thing, than actually lending out money. Because if you look at how much you actually pay on a $100,000 loan, $200,000 loan in interest over 30 years, it's buku money. Buku mega money. So investors like that. Investors like Buku mega money. Okay. So now what I want to do is this. I want to do this. You ready? I want to talk about Fannie Mae, okay, Freddie Mac, and Ginnie Mae and what they actually do, okay? So you really will probably get questions on Fannie Mae and Freddie Mac. You likely will not see many questions on Ginnie Mae, okay? You likely will not see many questions on Ginnie Mae, but I want to talk to you a little bit about what they do so that you could hear it, so that someone said, where does the secondary market get their money? Investors. They sell. They basically sell shares of Fannie Mae and Freddie Mac. That's the situation there. So here's the situation. Fannie Mae is the largest purchaser of mortgages and notes on the secondary market. Okay, Fannie Mae has the biggest Fannie on the secondary market. Everyone always laughs at that situation. They always smile. That always gets a giggle. Okay, Fannie Mae has the biggest Fannie. Okay, everyone smiles at that one. So what they're going to be dealing with is they're dealing with like the Bank of America, TD Bank, PNC banks, like the big ones. Okay, Freddie Mac. Okay, Freddie Mac. It deals with the smaller ones, okay? He has a little smile, okay? So what happens is Freddie Mac deals with like your local, like the San Diego Savings Bank, or the New York City Big Apple Small Bank, Big Apple Small Bank. That's basically where they're going to be dealing with. So they're going to go with that. They're going to be buying loans from there, and they buy all different types of loans. Then Ginnie Mae is the government entity. Listen to what I'm going to tell you about Ginnie Mae and all the government entities. Understand this. The government entities never buy loans, nor do they lend money. Repeat after me. The government entities do not buy loans or lend money. Why? They would go bankrupt in 35 seconds. The government does not have that kind of money. Okay? They don't. So you're probably asking, what do they do? And I'll tell you, again, you don't need to go into incredible detail as to what they do. Because what you want to do is you want to have the tree line skimming, you want to have basically a skim of the tree lines as far as what your definition of certain things are. You do not need the in-depth version. So Ginnie Mae, what they do is they're going to sell pass-through certificates to investors. So picture this. You ready? I'm going to show you. I'm going to show you Ginnie Mae how it works. So we're going to just kind of put her front and center. So what happens is there are banks over here. There are investors over here. And Ginnie Mae sells these little pass-through certificates so that money could go from investors to banks to make liquid, and listen to what I'm going to say, to provide liquidity for higher risk loans. Okay? So if basically a bank has lent out money to a higher risk loan and Fannie Mae or Freddie Mac, for whatever reason, are not picking them up, because again, they have investors, so there's going to be things that they will not buy, okay? They don't buy everything, okay? What happens is this. This side is, so just so you know, this side is the banks, this side is investors. And what happens is Ginnie Mae sells pass-through certificates so that what they do is they basically, it's just a hose. All that Ginnie Mae is a hose to have investors on the secondary market give money to this government entity. They sell pass-through certificates, these little things over here. And then what happens is the money passes through to the banks to provide some liquidity for high-risk loans. So like if a bank lent out $100,000 and it was a high-risk loans, okay? It was a high-risk loan, someone who might have had a low credit score, someone who might have had a lower down payment, and Fannie Mae or Freddie Mac didn't purchase it, and they have nowhere to offset it. Ginnie Mae would be able to come in, step in, and basically provide some sort of liquidity for those banks. Again, So, yeah, so Teresa said, so Ginny Mae gets the leftover loans that weren't picked up. So that is the situation there. Yeah, that's pretty much it. So Ginny Mae actually helps provide liquidity for the higher risk loans. So someone else said, I thought you said they don't lend money. They don't. I never said they lent money. I said that they're a hose. They're a conduit. They sell pass-through certificates. Investors buy the pass-through certificates, and then that money goes to banks, okay? So what happens is this. If you are watching live and you do want to see anything repeated or said over again, okay? So someone said, so Ginny Mae is like, I got your back kind of type. Yeah, that's basically what it is. But again, I'm giving you probably more than you need to know for the test. I'm just kind of giving you something so that you understand a little bit about what they do. They don't lend money, though, okay? So that is the situation there. So someone said, what is pass-through certified? I'm saying a pass-through certificate. That's what I'm saying, not pass-through certified. Let me write it down so that you see. They sell pass-through certificates to investors. Pass-through certificates. Pass-through certified. I love it. I love it. I love it. I can't even make that up. I can't even not laugh at that. So that is the situation there. So let's keep it moving and grooving, guys. Okay. And thank you for the chuckle. Okay. So I hope I helped you out. What I will tell you is this. It's something that, so a lot of people said, that's something that you really don't need that much of an in-depth thing there, but I like talking about it because, again, we're going to be spending some time together. So let's talk about these three loan types. You ready? We're going to talk about FHA. We're going to talk about VA. And we're going to talk about conventional, okay? So we're going to talk FHA, VA, and we're going to talk conventional, okay? And keep in mind, this is going to be on recording. So after this, you could actually come back and watch this as much as you want, okay? You could fast forward, rewind, all that kind of stuff. So tell me this. What is an FHA loan? What are some characteristics of an FHA loan? Someone said Northeast fast talking Stu. Whew. Yeah, I got a little bit of a silver tongue to me. I got a little bit of all these years of being in sales and working in real estate. I have 18 years of real estate experience, 14 years of instruction experience. Pew pew pew. So I'm red hot. I always go a little faster than some other people do. And I hope you don't mind that. That's why I tell you guys, you can rewind this, you can pause it, and you can watch this later on, okay? So, here's what it is. There is going to be a low down payment, okay? Low down payment, okay? As low as 3.5%. What? And they also do this. They also say, let's see. They also usually lend to credit challenged individuals. Okay? So here's what happens with the FHA, and I need you to understand this. Remember, it all goes back to, I don't know if you remember when I said this, but I said it all goes back to the banks being crotchety curmudgeons, okay? So here's the thing. So we'll draw our little bank guy over here because everyone loves Stu's drawings. Remember, those will be on T-shirts eventually. You got your crotchety curmudgeon bank, okay? They're like, they see a borrower come in, and the borrower goes, oh my God, I want to buy that little house. Remember, we did that scenario. We already been there, done that. And the bank goes, do you have money? And they're like, no. Don't have a lot of money. They're like, do you have a good credit score? And they're like, no, don't have a good credit score. So what is the FHA? I want you to tell me what the FHA is, and then we'll talk about what they do, okay? Because once you understand this scenario, it'll be really, really simple, okay? So the FHA doesn't lend money. So whoever said that in the chat, yeah, absolutely. You're saying the right thing, okay? They do not lend money, okay? They do not. So, let's see. The FHA is the Federal Housing Administration. Yes. And they insure loans. So, here's what happens. FHA sits there, and this is what they do. So, they see this interaction, and they're like, oh, my gosh, the bank's not going to lend money to them. Oh, my God. We're going to step in, and they go, hey, Mr. Lender, we're going to insure you. We're going to insure you for the borrower, okay? We're going to insure you. So what happens is, remember we said, government entities do not lend money. So the FHA insures the lender, Okay, so basically they're like saying, hey, the borrower's with me. They're with me. They're my guy. So what happens is the borrower's like, yay, and the bank allows them to take out a loan for as low a credit score as 580 and as low a down payment as 3.5%. But you don't need to know that particulars, but I like to tell you anyway. And once the FHA insures the lender, look, the borrower doesn't get off scotch-free. The borrower has to pay what is referred to as mortgage insurance premium. So basically, they pay the FHA to insure the lender. Okay, and that is referred to as mortgage insurance premium. So on FHA loans, they refer to the insurance as MIP, or mortgage insurance premium. So let me know in the chat, do you like that explanation? Was that a good one? Doesn't it all go back to the borrower, the lender, being a crotchety curmudgeon and not wanting to lend money? See, I told you it does. So that is the situation there. So that is good. So awesome. I got a whole bunch of thumbs up. Yes. Awesome. So let's keep going. Let's talk about VA. What is a VA loan? What is a VA loan? What is a VA loan? So someone said, so the borrower is going to have to pay insurance on top of the interest? Yep. Whenever you're paying, that is an addition to. So that is the situation there. So people are saying VA loans, they're for veterans. Yes, they are. So for qualified veterans, let's say that, because there are some qualifications. You don't need to know what they are, okay? But they're for qualified veterans. What kind of homes could they buy, okay? So what kind of homes will they buy? What are they getting? What are they getting with this loan? It has to be their primary residence, okay? Right? They must live there. So that is, and some people were saying spouses, widows, things like that. Widowers, yes, they could also qualify as well. Again, I said qualified veterans. I said basically the qualifications are that they have to be, okay? And Mike is putting in, I could tell you probably military, you're putting in the actual form numbers. Okay, I see you. Awesome. And if you are, thank you for your service. And also, if I do have any veterans watching with me who are looking to get their real estate license, I just want to take just one quick second out and say thank you for your service to our country. I am a big military supporter in regards to, I work with a lot of military in real estate. I'm actually a MRP, a military relocation professional. So I know a lot about this. I know a lot about the VA loans. So that's what I will say there. So let's get back into this. So it's veterans qualified. This is what I will tell you, okay? Zero down payment, okay? Zero down payment, okay? That is one of the biggest ones. And here's what happens. What does the VA do, okay? What does the VA do for the borrower, okay? Does the VA lend money? Nope, they don't. They don't lend money, okay? And I'm using that as a blanket statement. They do not, okay? And what happens is they guarantee the loan. So the Veteran Affairs, the VA, guarantees the loan. So what happens is they guarantee the loan over to the lender. The lender is going to have the loan guaranteed to them. That's why the lender's willing to take zero down payment. Okay, because again, remember, they don't want to do that, but when the VA steps in and goes, whoa, we're going to guarantee that. What I'll tell you is this. It is a big thing for them to go in and guarantee it. So a lot of people are saying VA nor Ginnie Mae lend money. Nope. And here's the thing. Everyone on the secondary market does not lend money. They only give liquidity by purchasing loans from the primary market. They do not originate loans, okay? It always is a primary market. So that is a VA loan. Now, let's go to conventional. How do I identify a conventional loan? And someone asked about the VA loan. What I will tell you is this: VA loan, as soon as you pay that off, that first loan off, you can get another VA certificate, okay? And you could get another loan, okay? So that's the situation there. But you just can't get multiple ones or use it for investment properties that you're not going to live in, because then otherwise what happens is a veteran would just buy up all these properties zero down. So someone said PMI. Okay, so Martha said, so helpful, Stu. And that's why I'm here. That's why I'm here for you guys, okay? That's why I want you guys to communicate with me. Tell me what's going on in the chat. So conventional loans, I'm going to make this really simple for you because remember, I like to simplify, okay? So there is, you ready? There is no government backing, okay? There is no government backing. Okay. Now, someone said low interest rate. Actually, some FHA loans right now are actually lower than conventional products. So it's funny. So a lot of people are actually saying right now, if you were to go get a loan, I would probably say get an FHA loan. Even if you qualify, look, there's nothing that says that you can't put more money down on an FHA loan. It's just saying you could have as little as 3.5% down. You could have as low as a 580 score. That doesn't mean that you can't get into a program right now. Like some people who would qualify for a conventional over over an FHA or vice versa, they're basically going FHA voluntarily. So someone said private lenders. What I'm going to tell you is this: no, there is no government backing on a conventional loan. So if we're saying, so basically what we're saying is this: it is not FHA or VA. It is not an FHA or VA. Okay, so a lot of you guys are saying, hey, this is a normal loan. Hey, this is a loan for rich people. No, it's just one that is not going to be FHA insured or VA guaranteed. Okay, that's it. So it's just, and there's some that are as low as like 10%. I won't go into the minutia of it, okay? But typically you need to have more money down in a conventional loan, because if you have a loan to value ratio of higher than 80%. So basically, if you're greater than 80% loan to value, okay, you're going to have to pay PMI, which is private mortgage insurance. What is private mortgage insurance? And I saw a couple questions about private mortgage insurance in there. So private mortgage insurance does not benefit the borrower. MIP, mortgage insurance premium, does not benefit the borrower. It's so that the bank feels better because, again, remember I said to you, it all goes back to the bank as a crotchety curmudgeon. So the bank is a crotchety curmudgeon. They want to make sure that they're guaranteed. So a stipulation of taking out the loan with a higher loan-to-value ratio, okay, the bank is going to require that you take out insurance to insure them, okay? That is the situation. Okay, so in the FHA loans, the FHA is insuring you. So you're actually paying mortgage insurance premium to the FHA. That's kind of like what they get for vouching for you, for insuring the lender. And PMI is private mortgage insurance. So it's basically, because there is no government backing, they call it private mortgage insurance. I hope a light bulb went off in some of your brains. So that is the situation with financing. So what we're going to do is I'm going to take my notepad out, okay? Is a crotchety curmudgeon on the exam? No. Basically, a crotchety curmudgeon is a synonym for stick in the mud. Think of it as it's the meh face from the Emoji Movie, for any of you who watched it. So if I have hundreds and thousands of you watching this, I'm sure 3 of you watch the Emoji Movie. So let's go on to fair housing. Fair housing, okay? So, and you see how we like to move it and groove it? We like to get through a whole bunch of different topics. So, and I like to get through the ones that I think are going to be on the test, okay? And that are going to be, things that you're going to need to know. So, okay, 1866 Civil Rights Act, okay? Civil Rights Act of 1866. Sharon just did a mad emoji for the bank face. That's a bank. So what is the protected class for the 1866 Civil Rights Act? Okay. Heather, you said LIBOR was on my exam and I had no idea what that meant. Are you in Long Island? Well, say yes or no, because that would make sense to me if that was the case. So it covers race. Yes. Race, okay? Okay, race. So, race is the protected class there, Colorado. Yeah, then I have no idea what that is. I'd have to look it up. Because if it was the Long Island Board of Realtors, I would say that made sense. But that might be a state-specific thing that I am missing. So keep in mind that. Keep in mind when I say national stuff that we're going over stuff that's going to be on your national exam, probably the harder portion of your exam, the larger portion of your exam. So whenever I'm talking to you guys out there, just keep that in mind, that there might be some state-specific stuff that might not make sense, that I might not be able to answer for you. And there's some state-specific stuff that maybe I would be able to. So 1866 Civil Rights Act, is there any exceptions to that? Is there any exceptions to that? Okay. Is there any exceptions to the Civil Rights Act of 1866? How many questions in the national portion? Depends on your state. State specific. There are no exceptions to the 1866 Civil Rights Act. No exceptions. Okay. So keep that in mind. Keep that in mind. Now, when I tell you about fair housing, I want to make sure that I also go over something else too. When it comes to fair housing, what I will tell you is this. You may have, keep in mind, okay? Keep in mind that you may have some state-specific, the state-specific fair housing laws that might be more inclusive or might include different things. So what happens is this: when you're answering a question, try to figure out what it is they're asking you on. Is this a federal law that they're talking about, or is this a state-specific law? Okay, because that's going to be the situation there. So the 1866 Civil Rights Act is covering race as the protected class. There are no exceptions. The Fair Housing Act of 1968. What does that cover? What does that cover? Okay, that's a bunch of them. So it covers race, color, religion, national origin, and ancestry. Okay? A lot of you guys are saying your tests are hard. Yeah, there's a lot of hard tests. Listen. There's a reason I'm not flipping burgers, okay? There's a reason I'm talking to you guys right now. There's a reason I have a job. So that is the situation there. So the Fair Housing Act of 1968 covers race, color, religion, and national origin and ancestry, okay? So let's take a look at this. So here's the situation with the Fair Housing Act of 68. There were two amendments. 74. What did they add in 74? Okay. They added sex, right? Male, female, okay? They added 74. They added sex, okay, into the protected classes. So you could not discriminate based on sex. Now, 88. What did they add? 88 was a good one. They added a whole bunch of stuff, right? They added a whole bunch of stuff, okay? So Cynthia said, when trying to decipher a question, whether it's national or state specific, it's really tricky. What I will tell you is this: with the fair housing stuff, they usually say, and I'm going to tell you, the trick with fair housing, they usually say based on the Federal Fair Housing Act, based on blank, based on the situation here. So what happens in 88, they added familial status, okay, mental and physical handicaps, okay, mental and physical handicaps, including AIDS victims. Okay, including AIDS victims. So let's talk about this for a second, because there's some questions on your test. Okay, there's some questions on your test that they will go into detail about. And also, too, a lot of this is going to be scenario based. So they're going to say, was this discriminatory? Was this discriminatory? Okay, so are alcoholics in treatment considered to be a protected class based on the 88 Amendment? Let me know in the chat. Are alcoholics going to be considered a protected class? Okay, whole bunch of you are saying yes, Mr. Stu. Okay, so The answer to that is yes. They are going to be considered a protected class because alcohol, and someone said only if they're in treatment. Yeah, I would say that would be a marker. They need to be in treatment. Yes, 100%. So another thing, let me ask you this. If someone is an an illicit substance abuser, okay, and they're in treatment, are they considered to be a protected class? Illicit substance. So we're talking about something illegal. Okay? Something no bueno. Nope. A lot of you guys are saying nope. That is correct. Okay? And I feel like those aliens on Sesame Street. Remember those? What do they call them? I think they call them the yip yips, where they go yip 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 yip. Nope. So yeah, so it is definitely no to illicit substances because if it is illegal, okay, this is going to be, they're not going to be considered protecting class. Okay, so what Fair Housing Act is this? This is the Fair Housing Act of 68. So that's the only one in 68 that is federal. Okay, so we're talking about that. That is the only act in 68 that is going to be federal. So that is the situation there. So why are alcoholics considered a protected class? Because alcohol is legal. Okay. Yeah, they were aliens, weren't they? They were called the Yip Yips, I think. Anyone, look, I'll give you extra credit right now if you could tell me what they were called. What was the name of the aliens from Sesame Street that went yip, 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 yip? Nope. I think it was the Yip Yips. I'd give myself a gold star if I remember that off the top of my head. However, let me talk about the three, the Yup Yups. Okay, so I was close. I like that. So you ready? We're going to talk about these now, okay? Steering, blockbusting, and redlining. Okay? So, let's see. Let us see. So, steering, blockbusting, and redlining. So, someone asked in the chat, what about immigration status? So, immigration status is not a protected class. Okay? If they ask you what country, okay, and it would allude to the national origin, I would say that is discriminatory. Okay, that would be a concern. And I think one of the questions on the test, that's why you guys are asking that question. One of the questions on the test alludes to, is it legal to ask about immigration status? Immigration status, whether you have a green card, not, that kind of stuff, that's fine. Because, again, immigration status is not going to be a protected class. What your immigration status is, where you come from, national origin and ancestry are. So there's a difference there. So that is the situation there. So let's talk about steering. Okay. Steering is this. So what is steering? Okay. So what is steering? So a lot of you guys are doing this. So steering is going to be channeling or directing buyers to or away from an area. Okay, so you're channeling buyers to or away from an area. Okay, yeah. So like you would have someone where you're like, oh, you belong to this religion. You know what? I think you'll be great here. You would fit right in. This is where you need to be. Okay, or you would say, oh man, I think you don't want to be here. You want to be somewhere else over there. So basically, steering is channeling buyers to or away from an area. So blockbusting. So someone asked me this: what happens if one ethnic group wants to go and see homes in an area that is predominantly of that ethnic group or of that minority? That's fine. Like, that's not you directing them there. If they want to live there because they feel more comfortable, like, if you have a situation where someone wants to be closer to their houses of worship, and it happens to be predominantly of that religion, like, that's fine if they want to be there. But if they're like, no, where do you want me to go? Like, if you're sending them listings, if you're the one that's guiding them through things, and instead of doing a self-guided tour, okay, what happens is you're taking them there, okay? That's the difference, okay? If they're saying, take me to this particular town, then fine. That's fine. That's fine. So if they're steering the conversation, okay, that is the situation. If they're the ones who are saying, I want to live here, that's fine. Okay. So that is the situation. Steering is going to be that. What is blockbusting or panic peddling? It's also called panic peddling or panic selling. What is that? What is panic peddling or panic selling or blockbusting? So that's basically when we say, okay, you knock on someone's door and you say to the seller, look, you should really sell now, okay? Because these people are moving in or these people are moving out. Ooh, that's negative. That's not good. So these people are moving in, okay? And basically you're inducing fear for them to sell. That's blockbusting, okay? So that someone said they are coming. Yes, the yip yips are moving in, right? I love those things. I don't know about you guys, but whenever I hear those, I always just laugh to myself. No, my God, Joe just said that I'm the best ever. Look at that. That's a great example of puffing, right? So let's keep it moving and grooving. Let's talk about redlining, okay? Let's talk about redlining. So what is redlining? Talk to me about that, guys, okay? So what is redlining? So redlining has to do with, redlining has to do with the for loans, right? Or what else? What else? It's not just loans. It's not just loans, guys, right? So it's for loans or insurance, right? Okay? So it's for lenders or insurance. And what are they doing? They're drawing a red line around an area and saying that they won't lend to certain people in this area, okay? So that's what redlining is. It's drawing a geographic box around an area and saying no, okay? So that is an illegal practice for both insurance companies and lending. So some of you guys, and here's the thing, that's very important for you guys to remember both of those, because a lot of you guys remember the lending, you forget the insurance part. So it's denying them that. Someone said the easiest rule in fair housing, don't be a jerk. And someone else said, what kind of dog you got? I have the kind of dogs that can see the mailman. So that is the situation there. There's probably UPS at this hour. What I will tell you is this. Let me talk to you about something that, like, a good test-taking tip, okay? A good test-taking tip in regards to fair housing. If you had 10, 20, 30 questions on fair housing, you won't have that many. Don't be scared. If you answered that it was discriminatory, if you totally didn't know, you were totally guessing, if you answered that it was discriminatory practice, I would say that 7 to 8 out of those times, 7 to 8 out of 10 times, you'd be right. So if you had to take a guess, and it was totally a guess, okay, I would say do the discriminatory. Always choose discriminatory, okay? Someone said I have a mad genius laugh. Mwahahaha. So let's keep it moving and grooving. That's fair housing for you. So look at this. We're about an hour into our session. We already got through 2 topics. Boom, boom, boom. So let's keep moving and grooving. Let's get through some more, all right? So let's talk about contracts. You guys always love talking about contracts, right? So let's talk about contracts. So contracts, okay, can be a couple things. Contracts can be implied or expressed, okay? They could be unilateral or bilateral. Ooh. And they could also be executory or executed, okay? And listen, I know when you guys get all excited about contracts, you always want to talk about void, voidable, unenforceable. I got you. We're going to go over that, I promise, okay? So let's talk about this. So what is an implied contract? What is an implied contract, okay? What is an implied contract? It's understood through actions. Expressed is written. So listen. Slater, I'm going to give you half a star for that one. Because implied, chef's kiss. Absolutely. Understood through actions. Express, not necessarily written. Express, the terms are clearly understood. So listen to what I'm going to tell you. You ready? An implied contract. And everyone knows the example of an implied contract. I go to a restaurant, I order the steak medium rare because you are crazy people. I don't trust anyone that orders a steak above medium rare. Those are the kinds of people that they can't trust them. You can't take them anywhere, okay? So I order a steak medium rare or rare, acceptable. Anything above, not. And what happens is they're going to bring me out the steak, okay? And it is implied that I'm going to eat it and I'm going to pay at the end. It is implied through my actions of sitting down at a restaurant, ordering the steak, okay, that they're going to bring it out to me. And what's going to happen is this. I'm going to get the steak, eat it, and pay. That contract is implied. At no point do we expressly lay out the terms where they say this is what we're going to do. Okay. Tyler said anything above medium rare is no longer edible. It's not even food at that time, right? Yeah, I agree with you, Tyler. Give yourself a gold star. So let's take a look at what an express contract is. So an express contract is this. An express contract is one that the terms are clearly defined. So when my wife says to me, Stu, do you want to go to a fountain pen convention? Yes, for those of you who do not know, I collect fountain pens. And yes, for those of you who also are saying there are fountain pen conventions, that's how nerdy I am. I go to fountain pen conventions. So when I go to a fountain pen convention and I see a pen and I go, oh, I like that pen. He goes, well, this pen would be $300. And I go, deal. And I give him the $300, he gives me the pen. Guess what? That is an express oral contract. Okay? So here's the thing. We can't really get into an implied contract like that. So I couldn't go up to the guy at the fountain pen convention, look at a pen and then like wink at him, be like, and then all of a sudden I'm buying the pen. It's one of those things that we have to talk through this. It's like, okay, how much is it? Let's talk about the terms, right? Okay, so that's why it needs to be expressed. So express could be in writing, okay, or it could be oral, right? So express, we just know the terms. It's clearly laid out. Austin said, I collect crystals. If I was single, Stu, I would probably collect way more things than I do. So hear me out. Are you saying you collect crystals? I would have everything. I'm bad like that. I'm basically, my wife tells me that I'm basically half a day away from being a hoarder. So let's do this. Let's talk about unilateral and bilateral. So what is a unilateral contract? Okay. What is a unilateral contract? So Carolina said, so express requires communication, written or oral? Yeah, I mean, you have to know the terms. So you have to know the terms, okay? So what I tell you is this. Unilateral is one. So someone said one person. No, it's actually going to be two people because I can't make a contract with myself. Be like, Stu, today we're going to sell you a pen. Like, no, I can't do that. Unilateral basically means it's binding to one party, okay? Unilateral means it's binding to one party. So here's the thing. Like a key with a unilateral contract is there's usually the word or involved. Watch this. You ready? You can buy my house or you cannot. Option. Right? That's a unilateral contract. You can or you cannot. Okay? So there's two people involved, but one is bound to act if the other decides on it. You ready? I lose one of my dogs. And I'm like, okay. I put up the poster on the telephone pole. You know, Mr. McScruffles is gone. Okay. Reward: if you find him, I'll give you a reward. You can choose to find Mr. McScruffles, or you could choose not to. If you do, you bring back Mr. McScruffles. Okay. Then guess what? I could. Okay. I would be bound to give you the reward. That's a unilateral contract. So what is a bilateral contract? What is a bilateral contract? Someone said it's a promise for a promise. So going back to my fountain pen example, right? Okay. Freedom said, we save dogs, cows, and pigs. That's amazing. I would love to. I would love to live on a farm. Like, the idea of living on a farm would be amazing to me because I love animals. But the actual work of like living on a farm and doing stuff like that would just not. I don't know if I'm built for that. I'm pudgy and I like comfort, like sitting in like air conditioning and stuff like that. So bilateral, getting back to that, basically, that the situation is this. Basically, a bilateral contract is a promise for a promise. Yes, it's me buying the fountain pen. I will give you $300. That's my promise. And their promise is to give me the pen. And then my wife will slowly but surely come up to me and say, how much did you just pay for that? And then I will have to say, okay, we have to reverse this whole thing. So that is the situation there. So a promise for a promise, okay? That is the situation. Now, okay, the next one is going to be executory or executed. So what is the difference between executory and executed, okay? Tell me what executory is first, okay? Someone said, do I have a snickerdoodle dog? No, my dogs' names are actually, my dogs are Molly and Rosie, not Mr. McScruffles. If I did have the choice of naming them, I probably would have named one of them McScruffles. Molly is like a Scruffles. And they're poodles mixes. They're like the poodle mixes. So that's what the dogs are in the background. The one that's usually the high-pitched one, that's Molly. She's 4.5 pounds, and she's fully grown. And then we have a 30-pound Havanese, and she's fully grown. So, and they're a riot. So executory, yeah, it means that they're still in progress, right? There's still work to be done. Still work to be done. So, executory means that we still got to do stuff. Executed also means what? What is executed? Executed is it's done. Dunzos. Okay? It's going to be, it's completed. It's in the past. Gone. All right? So, our contracts are going to be implied or expressed, unilateral or bilateral, executory or executed, right? So that is the situation there. Do you guys have any questions on those? Because that was pretty easy, because we're going to, listen, if you have no more questions on that, we're going to void, voidable, unenforceable, and all the crazy stuff, okay? So, Teresa said, can you give an example of executory? Yeah, absolutely. I give you an offer to buy your home. You sign the offer. It becomes a bilateral express contract that's in writing, okay? It becomes a bilateral express contract that is in writing. We are closing on March 15th, okay? We are closing on March 15th. It is a bilateral expressed executory contract. March 15th, when I get the keys, I move in, okay? Then it will be executed. Make sense? So right now, it would be it would be a situation where it is executory. Then later on, it would be executed. Okay, so that is the situation there. I see a bunch of you. There's light bulbs going off. We're looking bright. Someone said Disco Stew. Disco Stew doesn't advertise. Love it, love it, love it. Oh man, you guys are gonna crack me up. You're gonna make me just want to stay with you guys all day and just forget, going out and like doing stuff, like living a life. I'm just gonna help you pass the exam all day. So let's talk about void, voidable, okay, unenforceable, and enforceable. Okay, so let's see this. Someone said, just call me Brian, said I love his laugh. My laugh is contagious. Let me tell you, I could go anywhere and my laugh, but I'll tell you this, my best friend's laugh is actually more contagious than mine. So literally, if you get the two of us in a room and we both start laughing, everyone cracks up, and we could just literally make a whole room laugh with us just laughing. It's really contagious, okay? So let's talk about a void contract. So what would make a contract void? Okay, what would make a contract void? What would make a contract void? Okay, Ken Girl said, "Stay all day." Right? I think my wife would have a problem with that if I stayed here all day talking to you guys. But you know what? You can convince me to stay a little longer if you smash that like button. You hit subscribe to the channel. Remember, you guys too. There's a lot more Stu webinar and Joe webinar and Cynthia webinar, if you go over to PrepAgent.com, you sign up for membership, you get access to all of those, okay? All those things. So there's, like, you might not have live Stu, okay? You might not have live Stu, but you have a whole history. And here's the thing. There's a lot of things that you guys are saying in there where you're like, hey, can you go over loan types? Can you go over this? Can you go over that? If you go back through, you search our finance section, you can see a whole bunch of webinars that we have, not only myself, but Joe, Cynthia, that we've done on financing, where you could get a whole bunch of us you sign up for the membership. You could get a whole bunch of webinars where we go over all that stuff. So even though I might leave you in the live version of this, remember, you are going to have a whole bunch of things. So a void contract is going to be one that is for an illegal purpose, okay? So here's the thing. Someone said to me, missing one of the 4 elements, and here's what I will tell you about that. And this is my take. This is my take, my explanation, my argument, okay? And what happens is this. A void contract is one that is not for a legal purpose. So some of you said, oh, it's missing one of the elements. So what happens is the element that I always say that it's missing is the legality of the object, because if it has one of the other elements missing, it's just not a contract, okay? So that's the situation there. I would say it's for an illegal purpose, okay? So if one day I got really angry with my wife and I was like, you know what, I'm going to hire a hitman and that's it, done. Kaputskis. That would be an illegal contract. And plus, we would never do that to Mrs. Stu. Never do that to Mrs. Stu. So but we used an example. We went to the extreme. We said, let's say we go absolutely crazy one day. Crazy. We're not going there. But that would be an example of an illegal contract. Now, voidable. Okay? I should have my evil laugh with that one, right? That was a little evil. Thank you, Kara. So, voidable is what? What would make a contract voidable? Okay? What would make it? What would make it voidable? So a minor in every state but California. Yeah, so if you're watching in California, and a contract with a minor is illegal, okay? So again, if the contract is legal, okay, Diana said your Mrs. Stu would come back to haunt you. I think the ghost of Mrs. Stu would scare me so much. That would be, Mrs. Stu listen, she's a saint. She puts up with this. Look, you guys get a little dose of me every day. Imagine this 24/7. You'd want to wring my neck after a while. So, voidable is going to be a contract that is where someone's under duress. Someone's under temporary incompetence, okay? Temporary incompetence, okay? It's going to be something that it is someone's putting you under the influence. So let's say I went to a bar, okay, with my friend JJ, okay? So me and JJ are at a bar, and JJ says, I always like your pens, Stu. You have always these fancy pens. And he has 7 drinks in him, and I have 2 Shirley Temples. So I'm sober as anything, and he's just a little gone. He would say to me, I want to buy one of your pens. I was like, all right, well, that pen's going to be $400. He's like, it's perfect. That's exactly what I would need. Okay. What happens is if the next day I go to bring him the pen and I'm like, okay, $400. Okay. And what happens is this. He could say to me, look, no, I had way too much to drink. I'm going to void this contract. We're done. Kaputskis. Okay. That would be a voidable contract. Okay. Voidable means that there's some sort of undue influence, duress. It's with a minor, every state but California, and those would all be voidable, okay? So, let's talk about unenforceable, enforceable. And here's the thing. I always tell you this. You ready, guys? Okay? I always tell you guys this. Keep your definitions short, sweet, concise, simple. Simple as a dimple. You do not want to overcomplicate that stuff, okay? So what's an unenforceable contract? Tell me about this, guys. What does that mean? Okay. So someone said in the chat, Stu, minor is married and inherits property. Then what? They're illegal. So if a minor is married, they're an adult. They're an adult in the sense of the courts. If they're emancipated, they're an adult. Okay? So unenforceable is usually a contract. The best examples that I could give you are ones that do not meet the statute of frauds. An unenforceable contract is one in which, listen to what I'm going to tell you. An unenforceable contract is one in which it could be legal amongst the parties. Like it's okay for you to do this, but the courts can't get involved. It's unenforceable in a court of law, right? It's unenforceable in a court of law, okay? So what happens is this. You'll run into a situation where if you have a real estate sales contract that is oral, not written, okay, it violates the statute of frauds, means it's unenforceable. So here's the thing. There's nothing illegal about that. There's nothing voidable about that situation because I just said to you, oral contract to purchase real estate. Nothing void about that, nothing voidable. It's just unenforceable because they're like, you could go forward with it. It's legal and binding amongst parties. You could do it, but a court can't get involved to enforce it. It's unenforceable in court. Does that make sense? So here's the thing, guys. A lot of you guys always ask me, they go, well, what if it's for like a legal purpose or it's something like this? Wouldn't that be unenforceable? No, it would be void. Like we wouldn't call it unenforceable because unenforceable is said to be binding amongst parties. Like if you want to go forward with it, the courts basically go like this. They go 2 thumbs up. They're like, great, fantastic, have a great time. You could do it, but we can't get involved, okay? So let's take a look at this, okay? An enforceable contract, that is one that meets all of the legal requirements, okay? So meets all the legal requirements of a contract, and it is enforceable. So now, let's look at this. Let's do this. Let's talk about the legal essential elements of a contract. What is the acronym that we like to use, okay? Let's see. So, you ready? What are the essential elements of a contract? So, in an enforceable contract, the courts can get involved, right? So, we remember this as clock. And the reason I use clock without a K and not in writing, like I don't use that, is because we're talking general contract law. General contract law, the situation is this. It's going to be clock without a K. And what is that? That's competent parties. Okay? Legal object. And I'm going to move this up in a second. I know some of you guys might not be able to see this. Offer and acceptance. And that's also known as a meeting of the minds and consideration. Okay? And consideration. So, this is what it is. The essential elements of a contract are competent parties, legal object, offer and acceptance, also known as meeting of the minds or mutual agreement. Basically, we got to agree on something, and consideration. Okay? So, and the reason I wanted to end on that one as far as contracts is concerned, because that kind of wraps up contracts. So, guys, what you need to do is this. Remember, you need to smash the like button, hit that subscribe button, and let me know in the chat. Be like, Stu, we are absolutely loving this new format. We love seeing you guys here. This is absolutely fantastic. Love this one. So let me know if you guys, oh, you're going into fiduciary duties? So I will go to agency if you guys want this, okay? So I will do this, okay? I will do this. I will go there for you because, again, this is a whatchamacallit? This is student-led. I want to see where you guys want to go. So I'm glad you like the long webinars. And just keep in mind, like, Joe's watching, so he's like trying to see. He basically gave me the keys to the Ferrari. He basically said, don't crash it, but you know, you can drive a little fast, you can have some fun. So I was like, awesome. We're going to have some fun with you guys today. That's why we want to know that feedback as far as how you like this, because that's important to us. So let's do agency. Love agency. I haven't done agency in a little bit. So what is agency? So, what is agency? Tell me this, okay? What is agency? Why not a Lamborghini? Let me see. Let's see what you guys are saying. So, what is agency? Like, explain it to me, okay? Ken Girl said, I've been subscribed for a month now. Hope you're enjoying it. Hope you guys are enjoying this too, because like I said, I like doing this stuff. So someone said it's representation. It's a relationship between an agent, broker, and principal. Ooh. So here's my definition. I'm going to give you the Stu version, okay? I'm going to give you the Stu version, okay? And here's what I'll tell you. Agency is when an agent works on behalf of a principal, okay? Principal or client, okay? So basically, agency is when an agent works on behalf of a principal or client, okay? So, Mike said we need to buy Stu a beer. If I drank, I would totally tell you to send me something, get me some beer, but I do not drink. I'm Shirley Temples all the way. If you give me Shirley Temples, yes, listen, I'll stay here all day if you get me Shirley Temples, okay? So, agency is when an agent works on behalf of or represents a principal or client, okay? So, that is the situation there. It is when an agent works on behalf of a principal or client. Now, let me ask you this question, because you guys get this confused too. Who is a customer? Okay? Who is a customer? Okay? What's the difference between principal or client? Okay? Nothing. Just some letters. Okay? Principal and client is going to be a situation where, okay, they're synonyms, okay? So that is the situation there. So someone said someone who doesn't have a contract. So listen to what I'm going to tell you. I'm going to give you the Stu version of this, okay? I'm going to give you my thoughts, my what you need to know for the test and how they would refer to it as the test, okay? So principal or client, same, okay? They're the same stuff. So use them synonymously, okay? The customer, okay, and the customer is this, okay? They're going to be the third party. They're going to be the third party in a transaction, meaning if I represent the buyer, okay? If I represent the buyer, all right, in a transaction, then the seller would be my customer. So someone who doesn't have, what was I going to say? Someone who doesn't have a contract with you or work with you in any manner, shape, or form, they're nothing to you. They're nothing to you. They're not your customer. I would say because you don't owe them anything at all. Like there's nothing there. So someone who is a third party in a transaction, I refer to them as a customer. And what the test will tell you is you owe them fair and honest dealing. That's usually the wording that they use. They use fair and honest dealing, okay? So that is the situation there. So let's talk about the fiduciary duties, okay? The fiduciary duties. Now, let's talk about them. Let's talk about the acronym you use, okay? So the customer, again, just to repeat myself, is the third party in the transaction. If you're representing the buyer, it would be the seller. If you are the listing agent, so you're working with the seller, it would be the buyer, okay? So it is the third party in the transaction. Now, so here's the situation. What is the acronym we use? Old car. So let's go through what each one is. Obedience, loyalty, disclosure, confidentiality, accounting, and reasonable care. Okay? And now, here's the thing. Some of you guys are sitting here going, Stu, my teacher said that it was accountability. Well, poof on them, because I say it's accounting. Because here's why. Because accountability is kind of like obedience, loyalty, and reasonable care kind of mushied into one. Accounting means, number one, if you're going to be handling any kind of funds for them, you have to be able to have some sort of accounting, right, for the monies. So that's why I always use that. And here's the thing. There's other acronyms that people use for the fiduciary duties. I find this one to be the most complete. I've actually changed my instruction over the years to yield to this one because this, I feel, is the superior, okay, is the superior version of it in regards to the most complete, the most representative of what your fiduciary duties are. So I'm going to actually go through each one of them because I think that a lot of people don't realize what each one kind of means, okay? And there's certain questions that they have to deal with these on the test. So listen up, okay? So Lily Rosa said, what is this? I didn't see that there were weekend webinars. This is the Stu Saturday extravaganza. Pew, 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 pew. So what I'll tell you is this. We might be doing these more often, maybe every Saturday. So like that, hit that like button, hit subscribe. Let me know in the chat that you're loving this because that will show Joe that we should do this more often. So obedience, what does that mean? What does that mean? Obedience means that you have to follow any lawful instructions of your clients, okay? So listen to what I'm going to tell you. There's a question on some of the tests, some, not all, where it says the client gives you power of attorney and says you must accept offers that are above a certain price point. What should you do if an offer comes in that meets that criteria? And should you tell the seller, wait for them to come back, do all this kind of stuff? No, this goes to the obedience portion of the fiduciary relationship. You must be obedient. If it's lawful, your answer should be yes, ma'am, sir. Absolutely, okay? Absolutely, okay? So if you are given an instruction, it is lawful, then it is 1,000% something you should do. So someone said old car for principal. This is what the agent owes the principal. And let me clarify this. This is what the agent owes principal. Okay? I'm going to actually put it up here so that you see. There we go. Boop. Okay. Owes the principal. And the sound effects are necessary. It helps everything go along, just so you know. I know that you guys might not think that, but it does help. So the next one, loyalty. What does loyalty mean? Because people always get obedience and loyalty kind of confused, okay? So what is this, okay? What is loyalty? Okay, loyalty is this. Loyalty means you have to put their interest above your own. Okay, you have to put their interest above your own. Okay, so what happens is this: whenever you're talking about loyalty, it's basically like you can't sit there. Watch this. You ready? Okay. If you see a home and you see it's for a certain commission, like they're only giving you 2 apples, okay, to sell that home, guess what? What's going to happen is this. You sit there and be like, I don't work for anything less than 2.5 apples. I'm not going to show them that home. That's putting your interest above the client's. You are not being loyal to them. That is loyalty. Disclosure. What is disclosure? So tell me what disclosure is. Tell me what that is. What do you guys think disclosure is? Well, I take a little sippy. Triple Beam said, don't forget to smash the like button. Yeah, smash it. Hit that like button, okay? Disclosure is basically you must tell them everything you know, okay? Like it's basically you are a conduit for information. If you hear something, you must tell them, okay? So if I'm representing a seller and the buyer says to me, I'm willing to go up to blah, blah, blah. Well, I'm going to go, well, I have to go tell my seller that. Like, you can't keep that confidential, okay? Disclose everything you know, okay? Disclose everything you know, right? And also, let's go to confidentiality because they're kissing each other. They're kissing cousins of one another. What is confidentiality? What is that, okay? That means that if you're representing the buyer, you can't have loose lips and just go, well, listen. My buyer's really willing to go up to. No, unless your buyer, listen, naughty. Because then you're putting your interests above your buyer's. Unless your buyer said to you, you can say this in a negotiation. The answer is no, you cannot say it in a negotiation. You must be obedient. You must maintain confidentiality. You cannot do that, okay? You could talk. Listen, you should be, in a practical sense, you should be having these conversations with your clients, but you cannot do some of these things that these agents do. They'd make me do palm to forehead all the time. Can't do that. Accounting. Went over that a little bit. Accounting is basically accounting for monies. Like if they give you an earnest money deposit, hey, deposit it in a timely fashion. Deposit it in compliance with your state laws, okay? Then reasonable care. Listen to what I'm going to tell you guys. Know what you know what you don't know. Help people where you can, okay? And what I will tell you is this. Rebecca said, don't be singing. Yeah, like a canary. I'm from New York, so I know what singing means. I know the mob talk. You cannot sing. You cannot tell people things. That's the confidentiality she was talking about. So, reasonable care. Reasonable care is this. You cannot operate in any aspect of real estate, in any aspect of business where you don't know something. So like, let's say this, let's say you get your license tomorrow. You would not be operating with reasonable care if you got a client that said, I would like to buy a warehouse. Can you help me? And you said, yes, I can. That wouldn't be reasonable care. Even, hey, guess what? If you have no experience, like I'll tell you this, I started in the business when I was 19. I had to have people help me along the way. So I showed reasonable care by making sure that I had mentors and people help me throughout my first couple transactions because I never bought or sold a home. Okay. So Champagne said, this is my first live. So nice. Glad you're here. Glad you're here. I hope that helped you out. So keep in mind, what else I'm going to tell you is this. And I know we said it before, but we owe the customer, who is the third party in the transaction, okay? We owe them fair and honest dealing, okay? Fair and honest, okay? Okay. Let's see. Someone said in the chat, let me see if I could read this one. What if you are a broker and you signed a contract with the buyer and the as-is seller? So if you signed a contract with both, what happens is that's dual agency, and dual agency creates a situation where fiduciary duties are a situation where you basically would have a lot of fiduciary duties that are not going to be able to be given to both sides. So basically what happens is it switches to fair and honest dealing with each one of them because you cannot have confidentiality and disclosure to two parties. So basically in dual agency, all it is fair and honest dealing to everybody. Okay, you're almost acting as a neutral party. So that is the situation, okay? And someone said, Lily said, I notice on house hunters when buyers give their agent a price range, they always show them houses just above their price range. To me, that's not in their client's best interest. Okay, house hunters ain't real. I hate to burst your bubble. Like, that's like me watching the Avengers movie and going, what happens when Spider-Man goes up on the spaceship, and then he's having trouble breathing? That's like me trying to logic that out. House Hunters is pretty much the whole entire thing. They had bought the house before they even film anything. Just so you know, that's basically it. So it's all reality TV. So let's keep moving and grooving, shall we? We're going to talk about the 3 different types of agency. We're going to talk about. You ready? We're going to talk about this. We're going to talk about universal agency. We're going to talk about the general agency. And then we're going to talk about special agency. Okay? We're going to talk about special agency. Yeah, House Hunters is about as real as Tom Holland Spider-Man, okay? It's about as real as that. Yeah, so let's talk about universal agency. So tell me what universal agency is, okay? Yeah, I know a lot of people, a lot of my students, a lot of my agents have been on House Hunters. Someone said Stu is like the celebrity of PrepAgent. Did you hear that, Joe? I'm the celebrity. I'm the star. Prep agent takeover. This is a hostile takeover. We're gonna come back every Saturday. This is what we're gonna do. We're gonna have some fun. So I hope you like this, guys. Because like I said, I'm having a ton of fun with you guys. So universal agency is basically power of attorney, right? Because here's what I'm gonna tell you. Universal agency is you have universality. So that means that you could bind your client to and represent them in a lot of different things. So I have power of attorney, okay? I have power of attorney for my grandparents. So what does that mean? I could go buy a car in my grandparents' name. So if I said, hey, my 95-year-old grandfather, Benny, if I said to him, I said, hey, you want a new car? You want a Lamborghini? Sure, let's buy you a Lamborghini. It might not be the smartest thing in the world, but hey, I could do it. Okay? If I said to my grandmother, I was like, do you want to go buy 15 dogs? We could go, we sign our name, we could buy 15 dogs. We have a whole gaggle of them. So what I'll tell you is this, you could do a whole bunch of different things. You could do a whole bunch of different things for them. So basically you have universality in your representation of them, okay? If you want to buy your 95-year-old grandfather a car, go right ahead. So the next one, general agency. What is general agency? What is general agency? Okay. So what is general agency? Someone said Joe gives Stu a raise. I work off of goodwill and amazing energy. So if you guys keep giving me the energy, that's what fuels me. So general agency, I'm going to make it really easy, okay? Because a lot of you guys are saying property managers are an example of general agents. You're correct in saying that. So when it comes to general agency, they have universality for the client within one business aspect, okay? Within one business aspect, they have universality. Sorry about that, guys. I had a little frog in my throat, a little yip. So what happens is general agency, they have universality within one business aspect. So let me explain. Let's say Joe owned 15 apartment buildings, and he said, Cynthia, you're going to get apartment building A. Stu, you're going to get apartment building B. Now, I have universality within property management of Unit B. So that means that if there's a flood, if there's a vacancy, I'm going to be able to do that. I don't even need to run it by Joe. It's like this. It's like, Joe, I got this one. I got property B. Okay. But if his car broke down, okay, I couldn't sit there and be like, Joe, I noticed your car broke down. I'm going to take care of that for you. No, I do not have universal agency for him. Okay. Because I have to stay within my reigns of B. Also, if I see Cynthia over there and I'm like, oh my God, there's a flood in Cynthia's apartment building. Nope, can't do anything about that. That's not mine. That is not my apartment building. That is not my scope of business. I am a general agent for Joe's apartment building B. Does that make sense? I hope that cleared up maybe some of the misnomers that you might be having when it comes to when it comes to general agency. So it is universality within one business aspect, okay? So you could do a bunch of different things, but it's just you have to stay within kind of like your realm. You got to stay in, Janice said stay in your lane. Yeah, that's absolutely it. I got to stay in my apartment building B, okay? So that is the situation there. So let's keep moving and grooving. Special agency. What is a special agency? And I don't know what you guys are going to say. I'm special. You're special too. So what is special agency? What is special agency? Okay. Usually a real estate agent is going to be one. So Chris said us. Yeah, that is us. So usually when we're acting as a listing agent, what is our job? Our job is to procure a buyer. So what happens if the roof gets a leak in it and we notice that there's a leak? Well, we can't call up a roofer and be like, hey, look, we have a problem here. I need to get this done. That would be a property manager's job, not a listing agent who is just assigned to to get a buyer, to procure a buyer. So they have one specific thing. When I wanted to buy my new car, so this is what I did. I had, when I bought my new car. I was too busy. I was so busy. I sent my admin down. I gave my admin power of attorney just to sign papers for my car to go and buy my car. And don't think that I was buying some sort of bougie car. I drive a Toyota Prius, and it has Pringles in the front seat, and I'm have like empty cans. I am that guy that will have the empty food in the front seat. So I know some of you guys probably neat freaks are like, oh man, that's not me. I hate that, but that's me. So yeah, I had given my admin power of attorney to sign for my car paperwork, and that was all she could do. She couldn't go there and buy another car for herself. Okay, so that is the situation there. So let's keep moving and grooving. We're gonna listen to what I'm gonna tell you guys, because I love you guys and I'm having a lot of fun. We just went through 4 topics. I'm gonna give you, okay? Yeah, I have to get the food off the front seat. I do have to do that. I'm gonna give you one more topic that we're gonna go over. So, you ready? Okay, you ready? So someone asked me, how do you remember the difference between avulsion and accretion? Accretion, if you jumble up the letters, it looks like creation. So that is the gradual increase of land, okay? That's the gradual increase of land. And then avulsion is the sudden tearing away of land because it's violent. It has a V in it, okay? So, you ready? Last one. We're going to go through title. So what is title? What is title? What is title? This is where we're going to end. This is where all good things come to end. A title. What is title? So now you guys are just putting random questions there. So title is ownership, right? Right. Yeah. So we're going to talk about the several ways that you could take title to a property, okay? There's several ways that you could take title to a property. So let me ask you this, okay? Let me ask you this. How do we transfer title? How do we transfer title? How do we transfer title? So someone said, Stu, off subject. I had a question on my exam about land being indestructible. Yeah, it is indestructible. Like, see? Yes, absolutely. So, yeah, that's the answer to that. I don't know. If you give me more context, I'd be more than happy to further dive into that because I'm a good guy like that. I try to answer some of the questions when I see them come through. So, yeah, deed is how we transfer title. So, deed is evidence of transfer, okay? So, let's talk about the different ways in which we could take title, okay? You ready? Different ways that we could take title to a property, okay? Let's see. So we have, you ready? We have tenancy in severalty. Tenancy in severalty. What's another way that we could take title to a property? Tell me. I want to know. I want you guys to participate, okay? What are the ways? What are the ways? So we have tenants in common. Yeah, tenants in common. Okay. Oh, I see another one, joint tenancy. Love it, guys. So, tenancy and severalty. Talk to me about that. What do we mean by tenancy and severalty? Does that mean there's several of them? Okay. Some of you guys are saying tenancy by the entirety. I'm going to put that in there because some states don't recognize it, okay? And I'll get to it. Tenancy by entirety, okay? I'll get to it, okay? I'll mention it, all right? So inseveralty means one person, okay? Means one person because they have severed interest, okay? Severed interest. One owner. That's it, okay? So it could be one owner, or it could also be what else? It could be one corporation too, right? One corporation too, right? Yeah, it could be that. So that is tenancy and severalty, okay? What about tenants in common? What is tenants in common? Okay, what is that? What is tenants in common? I see you guys. You're wrapping your heads around all this. I like it. Tenants in common is basically going to be two or more owners. Two or more owners. Corporations could own property as tenants in common. Totally can. Okay. So severalty is one owner. Okay. It's severed interest. You're severed from the rest of the world. Tenants in common is more than one owner. Yes, it does allow for unequal shares. So those of you who are typing that in, yes, 1,000,000,000% it allows for unequal shares. It means that I could own 60% of something and someone else could own 40% of something. Like, I'll tell you this. I don't know if you know this about me, but I'm a risk taker. I'm someone that I'll sit there and I'll jump in on crazy things. So I invest in real estate. And now Mrs. Stu is super conservative, okay? Mrs. Stu is super conservative. So one day what happened was she said to me, I want to invest with you on your next crazy adventure. I was like, okay, cool, awesome, great, fantastic. Well, how much do you want to invest? She was like, I only want to invest a little bit. So we actually own a property, 90% Stu. I take on 90% of the risk, 10% Mrs. Stu. So we're tenants in common in that. Mwahaha, we invest. We're business partners. So let's keep it moving and grooving. What about joint tenancy? What is joint tenancy? So we went over tenants in common. That's two or more individuals or corporations that are going to own property, okay? And they could have unequal shares. And it does pass to their heirs, okay? So what happens is whenever an individual would die in tenants in common, it's going to go to their heirs. Make sense? So let's take a look at the joint tenancy. So a lot of you guys said rights of survivorship, right? So what is rights of survivorship? Tell me what that means. What do you mean by rights of survivorship? Okay. Right of survivorship. What do I mean by that? What do I mean by rights of survivorship? Okay. Also, some of you guys are saying T-tip, or you're saying T-tip or PITT, okay? Whichever one works for you, which is the 4 unities. Yeah, so rights of survivorship means it won't go to their heirs, right? Rights of survivorship means that it's going to go to the remaining joint tenant or joint tenants. Because remember, it's 2 or more. So there could be 4 joint tenants, right? Now, I have a question to ask you guys. This is an important question. Can a joint tenant sell or transfer their interest while they're alive? So they're alive, they're kicking, they're doing. Can they sell or transfer their interest? Okay. So, and I'll go over T-tip or PITT in a second. So tell me, can they sell or transfer their interest? 1,000%. Okay. 1,000%. They definitely can sell or transfer their interest. Now, here's the thing. I will tell you this, though. The new owner would be a tenant in common with the other joint tenant or other joint tenants. And those are the 4 unities. Let me explain them. It's a unity of time, title, interest, and possession. And what does that mean, Stu? What does that mean? Tell us. So I'm going to give you the example, tell you what this means. It means that in order to create joint tenancy, you must have the unity of time. Everyone purchases the property at the same time or comes into the property at the same time. Unity of title. They must all acquire it on the same title. Unity of interest. They must all have the same interest in the property. Okay? You can't have unequal shares of interest. And the unity of possession, everyone comes into possession of the property at the same time. If you do not have one of the 4 unities, you cannot have joint tenancy. Okay? So what happens is this. When we have the 4 unities, you can declare or decide to take the property and take title to the property as joint tenants, okay? So Brian asks a question, what if the other tenant is mentally incapable? Can you still sell? So what I will tell you is this. in that situation, the one who is mentally incapacitated would have to have someone who is who is acting as an agent for them. They would have to probably have a parent or guardian, stuff like that. Okay. But the situation is this. I mean, you could always sell as long as you are alive. You could always sell your interest in the joint tenancy. It's just selling the property. You would have to do what's called the suit for partition to force the sale of the entire property. Okay, so to force the sale of the entire property, you would have to do that. Now, just so you know, let me ask you this: will joint tenancy ever be automatic? Will it ever be automatic? Let me ask you that. So, someone said, Freedom said, same interest as in same amount of money invested. That doesn't matter. Look, one could have more money and they could still have, as long as the interest is equal. As long as the interest is equal, that would be the case. So, someone said, will it ever be automatic joint tenancy? No, never will be. It will never be presumptive. It will never be automatic. Meaning, they will never, ever, ever get to a situation where it's going to just be automatically like you take title to a property, you don't declare anything, and it's automatically joint tenancy. So when I say automatic, that means that is the default position. You have not declared anything in regards to how you're taking title, and it is just going to be joint tenancy. Never that way. Okay? The only one that's going to be default or going to be one that is presumptive is tenants in common. If you do not declare joint tenancy is how you want to take title to the property. Okay? So that's going to be the situation there. Now, I have another thing to tell you guys. Okay? So, tenancy by the entirety. Not every state recognizes this. Not every state recognizes this, but this is going to be for married couples, okay? It is the same as joint tenancy, except you have to be married to have that, okay? So Champagne asked, what is the best way a married couple should take title? That's for a legal counsel to decide. Again, Mrs. Stu and I have a property we own as tenants in common. Why? Because Mrs. Stu didn't want to invest that much money into it. Stingy. So that's the situation there. She was like, no, I don't want to invest all that money in it. So what happened was this. So Mrs. Stu is going to be a tenant in common with me. Now, in our primary residence, though, we are joint tenants, okay? So that is the situation there. Tenancy by the entirety, if your state recognizes it, it is basically the same as joint tenancy. You just have to be. So it's the unity of time, title, interest, and possession, but you have to add on their marriage. Now, what I will tell you is this. Guys, I hope you enjoyed what we did today. We spent almost 2 hours with you guys. Almost 2 hours going through all this stuff. So what I want you to do is this. I want you to tell me. We went through, so here's the things we went through. We did fair housing, finance, agency, title, and contracts. Oh my. So, guys, I hope you do like this. And again, if you are not a PrepAgent member and you are struggling to pass your exam, I want you to tell you a couple things. Private tutoring, just keep in mind, you do not need to be a PrepAgent member. So if you're like, I love this Stu guy, go over to PrepAgent.com, sign up for a private tutoring session, and I will be able to help you pass your real estate exam. I will try. We have done hundreds, if not, we're coming close to thousands of private tutoring sessions. So plan ahead. And what I'll tell you is this. This is something that we love doing this. I want to also tell you too, if you are not a member of PrepAgent.com, sign up for membership. This is what your dashboard is going to look like. You're going to have webinars where you can get to see me, Cynthia, Joe, interact with us just like this. We do this all the time. So I'm doing this for you guys maybe every Saturday. Who knows? Okay. And what I'm going to do is this. I'll tell you there's going to be a lot of stuff that we're going to be putting together. So really dive into the PrepAgent member section. Sign up because let me tell you something. It is the bee's knees. There's a lot of stuff for you there. We have an Android and an iOS app. Just keep that in mind too. So if you want to do flashcards flashcards on the go, exam prep questions on the go, then guess what? We got that for you. Vocab worksheet. It's amazing. It's beautiful. Okay. Someone said, how long do you recommend studying before taking the test? Do not study every day for more than a good movie length. And let's all agree as a family, the Titanic was not a good movie. So if you get to the hour and a half, 2 hour mark, that's about it, okay? And do a mix of things. Treat this like the gym, okay? That's why I recommend PrepAgent, because there's a mix of different things. You could do flashcards someday, the prep book, the webinars, the vocab worksheet, the practice exams. So treat this like the gym. Don't just find your favorite machine at the gym. Don't just find your favorite method of studying. You want to mix it up, okay? Remember, I'm going to tell you this. Stu doesn't like the row machine. That is an evil machine. I think that the person who invented that was really, really cruel. So when I go to my personal trading session, he goes, Stu, have you done the row machine this weekend? I go, you know the answer to that. He's like, all right, get on the row machine. So basically what I'm going to tell you is this. Even though you might not like flashcards, you might not like the vocab worksheet, you might not like practice exams, what I tell you is do it. Treat it like the row machine and me, and force yourself to do it, okay? So guys, listen, I hope you like this. Hit that like button, hit subscribe, sign up for PrepAgent, sign up for private tutoring, and I'm out. I'm going to see you guys real soon.